Good afternoon, everyone. Welcome to another episode of Earnings Call by AB Capital Securities. We are grateful that you are able to join us this afternoon as we will be speaking to a company who will be making their first appearance on our channel. But before I introduce our speakers, let me first introduce myself. I am Jep Tan. I am with AB Capital Securities and I will be your host and moderator for our call this afternoon. I'm really excited this afternoon because for the first time, this event is being simulcast over Facebook, Twitter, YouTube, and Instagram. So please tag your family and friends and invite them to our conversation. Speaking of which, I encourage everyone to interact with us, starting off by letting us know where you are. And please be sure to type in our hashtag ABC earnings call. This is also something that we're doing for the very first time in this channel. So we are really excited, and I hope you feel the difference during this event. So please reach out to us. Let us know what you're thinking, what your findings are or opinion about this company whom we're going to talk to in a very short while. But before that, um, okay, I can see some people are starting to log in. Let's give them a few minutes. And I don't know if you were able to notice our advertisement over our Facebook channel. There was like a teaser there. It was like a guessing game as to who we're going to speak to today. Just to give you a little bit of clue about this company, well, it's a listed company, of course, and the company is operating in the property development space. Our guest company is also the master developer and primary owner of Aseana City, a 107-hectare mixed-use master plan CBD located along the coastal waters of Manila Bay. Now, this company, just like so many other companies, have been adversely impacted by the COVID pandemic, but this company has proven to be very resilient. And in fact, they have launched a lot of projects and they have continued some or most of their projects that got hampered during the pandemic. And as I've said, their expansion is all systems go. They've grown their commercial building space by 79% to 162,351 square meters in 2021. This company also added another 70,000 square meters in its portfolio, and with the soon completion of its largest development yet, which is the Parcal development. Okay, maybe you are already getting a hint of who this company is, but this company is a commercial leasing and a property developer, and one of its main tenants is St. Luke's Medical Center, Landers. I don't know if this is something that can be. Anyway, I'm not too sure if this can already be shared, but they've landed a recent locator as well. Now, one of the things that really attracted us to this company and something that we would like to share with you is the valuation discount of the stock's market capitalization to the company's internal base net asset value. The discount is 90%. And this is something that really drew us to speak to them and invite them here. And we are very grateful that they have granted us this time this afternoon. So without further ado, everyone, let me introduce to you our speakers who are the key executives from Wenceslao and Associates with the ticker symbol DMW. So the first speaker is Mr. Delfin Wenceslao. He's also called Buds by his friends and most of the people in the circle in the investment industry. And Buds is the president and CEO of DMW. Joining Buds this afternoon is Attorney Herson Asidao. Attorney Herson is the Chief Finance Officer of DMW. And of course, this guy might be familiar to some of you here. Julius Guevara is the VP for Corporate Planning. He used to be with a property broker. And last but not the least, we will be speaking to their Investor Relations Officer, Mr. Jeffrey Jeff Lucero. Gentlemen, thank you very much for being here with us this afternoon. Please join me on screen.
Thank you, Jep. Happy to be here. Thank you for the opportunity, to share a story to your clients. Definitely looking forward to a lot of questions. No? So thank you for the introductions. Very kind. We have a full team for you guys. So yeah, a lot in store.
All right. So everyone, if let's keep this interactive and let's make the most out of this time that we were given. So if ever you have some questions, just kindly type them in the chat box. And during the presentation, we will just we'll just acknowledge them and we will get to them at the end of the presentation. So Jeff, I understand you'll be the first to speak.
Yes, that's correct. So
All
I'll
right.
handle the start of the presentation, man.
Okay. I'll leave the floor to you.
Okay. China, when you're ready. Okay. Can we go back to the start of the presentation? All right. So thank you again. Again, we have a full team for you to meet you guys. Mr. Buds Wenceslao is here, our Chief Executive Officer, Attorney Herson Asidao, our Chief Finance Officer, Sir Julius Guevara, our VP for Core Plan, and yours truly. Okay, on to our first slide, please. We can move to our first slide. Another slide. Okay, so allow me to provide a brief company background. No, so we were established in 1965. We have a storied 57-year corporate history. We are one of few quadruple A PCAB license holders, and we have 77 hectares of land bank, 56 hectares of which is inside Aseana City, which is our crown jewel, and 21 hectares outside of Aseana. Jep alluded to this earlier, no, but Colliers Philippines has valued our assets inside of Aseana City at 220 billion pesos, and comparing that to our current market capitalization of only 23 billion pesos means that we're trading at over 90% discount, no, to net asset value. Next slide, please. So these are the milestones that led us to where we are right now. In 1965, we started as a contractor for multiple government infrastructure and horizontal projects. No? And then it was in the early 90s when we took on this over 200 hectare reclamation project in Manila Bay, and for which we were awarded the parcel of land that we're now developing into Aseana City. And the part went to the government has been developed into the entertainment city. So just beside us is the entertainment city now. And then from there on, we sort of evolved or transitioned into a full-fledged property company. We started with a land lease with key tenants like SNR. We built mixed-use developments and then offices, residential projects, and more on. No, and then recently, or a few years back, we started to diversify outside of Aseana through a purchase of a property in Makati City. And then just last year, we also completed our first commercial development in Jupiter Street, Makati, the 58 Jupiter. And while all that was happening, no, here in Aseana, we're also completing milestones after milestones. We recently completed our largest office development yet, the 69,000 square meter 8912 Asean Ave. And then we were also able to secure best in class, best institutions as land lease locators like Landers. And just last month, no, we signed our contract of leasing with St. Luke's Medical Center for the St. Luke's Aseana City. So very soon, we'll have the best healthcare institution in the country locate here inside Aseana. So next slide, please. Okay, so these five are our business segments. No, there's the construction, land reclamation, land sales and leasing, residential development, as well as commercial building leasing. The numbers 3 to 5, starting with land leasing, these are the ones that drive our earnings currently. No, in terms of our land leasing, we are leasing out around 165,000 square meters of land to quality and long-term tenants. The biggest part of which is leased out to Ayala Land for the largest Ayala Mall in the country. So they're leasing the land from us. No? Also included in this, as mentioned earlier, is St. Luke's Medical Center. That's around 1.4 hectares. No? And then we have around 4,200 square meters of land allocated for future sales. Moving on to the residential side, we've already completed our first residential project and fully turned over it last year, which is Pixel Residences. Currently, we're pre-selling our second residential project, the Mid-Park Towers. That's already 75% pre-sold of launched units and around 30% of completion. No? In the pipeline is One Park Suites here inside Aseana and the residential development in Makati City. Moving on to commercial building leasing, we have a total of 162,000 square meters of available space for lease. This received a huge boost from the completions during the fourth quarter of 2021, and that will be discussed throughout the presentation. This year, we're also looking to complete our largest mixed-use development yet, which is Parkal. That's over 70,000 square meters. That will bring our total to over 230,000 square meters of gross leasable area. So next slide, please. We can move on to the next slide. All right, so with that, I will now turn the floor over to Mr. Julius Guevara to provide a Philippine property market overview.
Thanks so much, Jeff, and good afternoon. Markets. And as you know, like COVID has presented a challenge that has been unprecedented and unseen before, in history, and it's really affected our property markets drastically. But luckily, we're now starting to see some green shoots, and there's some improvements in the performance of the various real estate sectors. So first of all, in the office market in Metro Manila. So at the end of 2020, the stock was at 12.3 million square meters. That rose to about 12.9 million square meters by the end of 2021. Now compare this to the projection pre-COVID of about 14.2 million square meters. So there has been a significant slippage in terms of the stock because of the construction delays brought about by the pandemic. So by the end of 2024, this is supposed to grow to about 14.9 million square meters, or an increase of about 21% if you compare it from 2020 levels. Focusing on the Bay Area, from about 979,000 square meters in 2020, this will rise to about 1.3 million square meters, or a change of about 36%. The Bay Area continues to grow. So most recently, a couple of new significant buildings have been completed, and that includes our own development, 8912 Aseana Avenue. It's about 65,000 square meters. In 2022, about close to 150,000 square meters will be introduced, but then that will taper off. Which is, it actually bodes well because as of now, as you probably know, vacancy rates have been climbing. At the end of 2021, it hit about 15.7%. By the end of the first quarter of 2022, this rose to about 17.3%, and it's projected to continuously grow. But the good thing is we're no longer seeing contractions or office space being put back into the market by vacancies of existing office dwellers, but the increases are being driven by new supply. And in terms of some of the good news, Colliers observed in the first quarter of 2022 that transactions were up by 30% year on year, and Lead True Property Consultants also observed that during the first half of 2022, take up or transactions is already about 70% of the entire year in 2021. So yeah, transactions are now being completed, and it's due to the opening in the economy that we've seen since the last surge in January. So hopefully this will continue in 2022. Will end up in the positive note. Okay. The next slide, please. So as for the residential market in Metro Manila, so this is specifically for the condo market. By the end of 2020, there were about 133,000 units. This will rise to about 166,000 units by the end of 2024, or an increase of about 25%. In the Manila Bay Area, which is where you can see a lot of residential condominium development activity, this will increase significantly from 22,750 units to around 44,150 units, or an increase of about 94%. The Bay Area actually constitutes about 64% out of the total supply that will be introduced during that period. By the end of 2024, the Bay Area will exceed the stock of Fort Bonifacio, so it will be the primary CBD for condos by the end of 2024, comprising around 26% of the total supply. Now, with regard to the supply and demand statistics, new project launches continue to fall in 2021, or a reduction of about 10%, while sales take up further deteriorated by about 68%. So in the first quarter, we saw launches of only about 2,000 units, whereas take up was only at 3,000 units. Now, having said this, mobility is doing a positive effect on sales. So as people become more mobile, and I'll show you some of that statistics later on, that will drive condo sales. Because sales agents can now finally visit their prospective buyers. These prospective buyers can finally go to sales rooms and view these units, and that will drive sales activity. And Lichu Property Consultants actually observed an increase of about 54%, from an increase of 54% in sales from the first quarter to the second quarter of 2022. So we're cautiously optimistic for the rest of the year regarding condo sales. Next slide, please. So just a quick overview on where we are in terms of the COVID pandemic. As you know, the COVID numbers have dwindled over the past few months, and vaccination rates have increased. So about 65% of the population is now fully vaccinated. Although in the past few weeks, we are now seeing a slight increase in cases, in daily new cases. It's now hitting 1,000. But in terms of the severity of these new cases, they range between no symptoms to very mild symptoms. So the vaccine is taking effect. Bed occupancy is also very low, less than 20%. So, we're very hopeful that the pandemic is finally under control. If you compare the Philippines to our neighbors in the ASEAN region, we are catching up. And if you compare us to those with populations of more than 50 million, then we are actually doing quite well. And finally, in terms of our mobility, so Google actually monitors the mobility of people since the pandemic, and that has fallen off, as you know, during the peak of the pandemic. But during this year, we're actually starting to note an increase, and by the end of June, it's actually 15% or 14% higher than what it was pre-pandemic, and that trend continues during the first few days of July. So hopefully, with the lower alert levels, less restrictions on mobility, this will help economic growth and resurgence in business activity. So next slide, please. So this just shows the alert levels, various alert levels, and we're now at alert level 1, which is the least restrictive, and this is being upheld by the government until July 15. So hopefully, despite the increase in new cases, this will still be maintained because of the lesser severity in the cases. Okay, so I'll turn you over now to our CEO, Bud Wenceslao.
Sige. Hello. Hi, buds. Yeah, we can't hear you. But Julius, Jeff, thank you very much for that for the first part of the presentation.
Can you hear me?
Yeah, there you are. We can hear you,
Okay.
buds.
Okay. Next slide, please. I'll be talking about the key investment highlights of the company. Next slide, please. So when we talk about DM Wenceslao, it's important to talk about its role as a master developer of Aseana City. In terms of real estate, there's three major rules. It's location, location, location. And when you look at the location of Aseana City, you're talking about three major aspects. In terms of the transport, major transport infrastructure, you have the NAIA Expressway, you have the PTEX, the Parañaque Integrated Terminal Exchange, and you have the NAIA Terminal 3 Airport. All of these infrastructure developments, along with the major locators of the entertainment city, as well as the SMO developments and the major meetings, incentives, and convention events, add significant value to the strategic value to the location of Aseana City. So this is why major locators like the recently closed Landers and St. Docs chose Aseana City as their base of operations here in the Manila Bay Area. Next slide, please. Looking at our land bank, there's still a substantial left in our inventory. From the 56 hectares that the company has, you have about 27 that's been leased, developed, sold, and have been allocated for pipeline projects. We still have 29 hectares left. That doesn't include the 10 hectares that are still with a mother company, which we can inject to the list go for further development. Next slide, please. Looking at the historical appreciation of capital values in the Aseana City, so you're looking at a 23% compounded annual growth rate from 6 years ago. That's actually 21% from 2006 to 2021. We started at about 30,000 per square meter. We're now currently at 440,000 per square meter. We actually saw that even during the pandemic, capital values increased from 425,000 pesos per square meter in 2019 to 440,000 pesos per square meter in 2021. Next slide, please. Next slide, please. So in the late 80s to the late 90s, we were doing mostly value creation by reclaiming the land. But now we're already in the value extraction stage through land leasing, land sales, land development through the condos and the offices. So we're mostly extracting that value already from our current land bank. Next slide, please. Basically, this is the master plan of Aseana City. So we're basically master planning or developing Aseana to be a next generation city. So we're implementing a mixed-use master plan. We're making sure that it's holistic and that we're not just planning the vertical developments, but we're also master planning the sidewalks, the parks, the public infrastructure, and we're making sure that we're basing the development based on global standards. So everything we need to plan, build, operate, and maintain Aseana City is already being done in-house, from landscaping to lighting to architecture to urban planning. All of that is within the internal capabilities of the company already. Next slide, please. So this just show the master plan. So all of the buildings on your left are the current developments and pipeline of Aseana City, and all the buildings on your right are the major locators, including SNR, Singapore School, Blue Leaf Event Center, Norangde International School, and the other land leases. So the orange buildings are basically your commercial properties, the yellow is the residential, and the purple is the special uses, which are basically the integrated resorts and casinos. Next slide, please. Next slide, please. So during the pandemic, we've actually been able to grow our core net income from 1.6 billion to 1.9 billion pesos. In terms of our revenue, we've also been able to increase from 0.047 pesos per share to 0.06 pesos per share. Next slide, please. Again, we still have a conservative balance sheet, even though our net debt increased from 6% to 13%. But this just goes to show that how we've increased the development pipeline of Aseana City as we build out our committed pipeline during the IPO. BPI, BDO, and Security Bank are still our major lenders, and most of our loan rates right now are still at fixed at 3%, which is still relatively conservative. Next slide, please. Next slide, please. As mentioned, we are in a hyper-growth stage. We're building out our development pipeline. We started with 90,000 in 2020. We added currently 70,000 square meters last year. This is the 8912 Aseana Avenue and 58 Jupiter in Makati, our first project outside of Aseana City. We're currently on track another 70,000 square meters this year with Parkal, our mixed-use development. That's 9 small buildings along a major public space, a linear park, and we're excited about this coming online by the end of this year. Next slide, please. Parkal is currently at 70%. Again, it's slated for completion by end of this year. Next slide. In terms of our residential portfolio, Mid Park is still being constructed. It's currently at 28% construction progress, even though it's already at 60% pre-sold. Next slide, please. We still have a lot of development pipeline left in terms of our commercial properties, which adds to our recurring income. We still have about 200,000 square meters. This is basically Aseana Plaza. In terms of our residential portfolio, we have another 30,000 square meters, One Park Suites, that's currently undergoing planning stages. For other notable transactions, next slide, please. For other notable transactions, this is actually reflected in our valuation. So as mentioned, we're currently valued at 220 billion pesos as per our 2022 and 2021 valuation by Colliers. If you include our 2.7 billion cash, that's about more than 90% discount to value. That being said, we're still at our current market cap is at 20 billion. Julius will talk about other transactions that was recently conducted in Aseana City. Next slide.
Thank you, Buds. So for notable transactions, so back in December 2021, we conducted the
Hey, Jeff. I think your mic is on mute.
Yeah, I think merong technical difficulties, but it's being fixed. So Julius will be presenting next about our notable recent transactions, no,
Yeah.
the one that we've discussed earlier.
Sige. That's fine because well, I guess thank you again to everyone who are joining in. I've seen a few are I guess what do you call that? Geotagging themselves. So I have Sai
Sure.
Manrique. Yeah. So she's joining us from North Cotabato, all the
I
way
see.
from North
Wow.
Cotabato.
From North Cotabato. Okay. Hi. Hi. So, Jeff, from our
Yep.
end, Sir Julius is
It's
already
ready.
ready. The
Sige,
technical
let's
problems
have
were
him back.
resolved.
Yep. Go ahead, Julius.
Jeb, can you hear me now? Okay, if you can hear me, so I'll continue. Let me just talk about our notable transactions and our recent past. So back in December 2021, we conducted a land sale of a lot for around 1,790 square meters. So the total value of that was 787.6 million, VAT exclusive, with a land sale gross margin of 93%. So that translates to about 440,000 per square meter, which is much higher than our uh, latest land sale back in 2019, which was at 425,000 per square meter. Okay, and then next slide, please. In January, we conducted a similar transaction, same size, 1,790 square meters, with the same value as well, so 440,000 pesos per square meter, translating to about 787 million pesos. So these plots were sold. These basically form part of the land we allocated for future sales. After these two land sale transactions, our company's available land for sale stands at 4,200 square meters, more or less. Okay, so next slide, please. So with regard to recent land leases, so one significant transaction that we completed is with Landers. So as you know, Landers is one of the top warehouse club type retailers in the country. They signed a 25-year contract of lease with us for parcel of about 1.5 hectares. So Landis is as I mentioned, it's a major shopping, membership shopping chain, and this actually rounds up. Like we now have two major membership club type retailers in Aseana City. So it just gives more excitement in the estate. And then finally, next slide, please. Jeff mentioned this earlier. So this was a transaction that we were really excited about. We finalized last month. So St. Luke's is coming to Aseana City. So we signed a contract of lease with them for a 1.3, 1.4 hectare parcel of land. The lease period is 50 years, commencing in June 2022. So it's probably our longest land lease. So this land lease will bring our company's total leased land to 164,895 square meters and will definitely augment our recurring income. As you know, St. Luke's Medical Center is recognized as a leading and most respected healthcare institution in the Philippines. Its two facilities in Quezon City and Global City, Taguig, have a combined total of 1,146 rooms with over 60,000 average inpatient admissions and 2.7 million outpatient consultations annually. So it's very exciting that we have them here in our development. Now, I'd like to turn the floor over to Attorney Herson Asidao, our Chief Finance Officer, who will discuss our financial highlights.
Thank you very much, Julius. Next slide, please. So just to give you a summary of what transpired during the first quarter of this year versus the first quarter of 2021. So it's pretty exciting. Our core net income jumps almost threefold to year on year to about 961 million. That's 364 million in the first quarter of 2021. Now, what brought about this threefold increase or growth in our bottom line? Our top line increased from 692 million up to about 1.6 billion during the first quarter of 2022. The main reason behind this is because of the fact that first, as mentioned by Julius earlier, we were able to close a land deal during the first quarter of this year, and that amounts to about 788 million. That was closed at about 440,000 pesos per square. This is actually contrary to the previous forecast made by certain institutions, wherein the land values or property prices within the city decreased by about 10 to 15%. So that's actually up from the previous transaction that we closed in 2019. Aside from that, in terms of our recurring revenue, so our total rentals also increased by about 13% from 497 million up to about 560 million. In addition to that, our sale of condominium units also increased by about 20% from 194 million up to about 233 million. So for the first quarter of this year, we have a positive outlook and growth rate of about 163% comparing first half of 2021 during first quarter of 2021 versus the first quarter of 2022. Next slide, please. Now, just to focus on our leasing business. So during the first quarter of 2022, we registered about 560 million from this segment. That's 247 million from land leasing, building leasing, that's 214.6 million, and the other revenues allied or related to our leasing business, that's about 98.6 million. In terms of our segment margin, that is hovering above 70%. During the first quarter of this year, we registered a segment margin of 76%. Now, just to give you a background of the margins that we have amongst our segments. So in terms of land leasing, our margin is actually above 97 or 98%. In terms of land leasing right now, based on the most recent deal, that's about 93%. For office leasing, that's over 70%. And for our residential sales, it's usually above 40%. We have weighted average lease expiry of about 5.8 years. This is as of the end of the first quarter of this year. Next slide, please. Now, just to give you more focus on our leasing activity. So in terms of the contribution of our recurring income to our top line, that's 35% during the first quarter of this year. That's down from 72% during the first quarter of 2021. The main reason behind this is because of the fact that we were able to sell a certain parcel of land during the first quarter of this year. So it's just a change in revenue mix. In terms of total leasable floor area, that's up from 90,000 square meters in 2020 to about 162,000 square meters in 2021. As mentioned by Buds a while ago, this is mainly because of the 8912 introduction or completion of 8912 during late 2021. So that gave us more leasable floor areas to lease out, and which is the same as of the end of the first quarter of this year. In terms of total land lease area, it's pretty stable at about 150,000 square meters. Next slide, please. Now, focusing on our residential segment, during the first quarter of this year, we registered about 233 million. Currently, we are focusing on our second residential project, which is Mid Park Residences. Our first residential project, which is the Pixel Residences, is a jackpot project. We introduced that late 2016. In about 7 months, it's already sold out. In terms of price point, we started selling that at about 130,000 pesos per square in 2016, and it closed at about 180 to 200,000 pesos per square. Now, for our second residential project, the initial price started at about 220 to 230,000 pesos per square. Now it is selling at about 300,000 pesos per square meter. So that's how property values are increasing, notwithstanding the fact that the second residential project is still at the pre or construction stage. Now, in terms of our segment margin, if you will take note, in 2019, that's 43%. In 2020, that's 45%. In 2021, that's 63%. And during the first quarter of the year, that's 57%. The main reason behind this huge increase to 63% in 2021 is because of the fact that we were able to close out our first residential project, which is Aseana, the Pixel Residences. Now, just to give you an update on our second residential project, so we were able to sell out 75% of the total units that we have launched for this particular project. And just like what happened during the first project, we have a very good collection as far as this the second residential project is concerned. In fact, we already collected about 32% of our the average collection is 32% as far as the those sold units are concerned. So this means that the probability that the buyers will cancel out their purchase is are remotely possible. So we are pretty assured that most of our buyers right now will continue until the completion or turnover of the units. Next slide, please. Just to give you background of the ratios of our group. So gross profit, we have a very high gross profit of about 85% during the first quarter of this year. That's 83% full year in 2021. I have mentioned to you a while ago about the huge or significant margins that we have amongst our segments. Operating profit, that's up from 72% in 2021 to about 77% in the first quarter of 2022. The significant or the change is mainly brought about by the change in sales mix because of the land sale that we're able to close during the first quarter of this year. EBITDA, that's 77%, up to about 80% due to the same story. As well, in terms of our net profit attributable to the equity holders of the parent company or net income, that's above 60%, 2021 and 2022. If you will take note, you can probably compare us with our peers in the industry. We're usually on top of the pack in terms of these margins and ratios. Next slide, please. So in terms of our debt to equity ratio, it's very low at about 13%. This was mentioned to you by our CEO a while ago. Return on equity, that's above that's 70% during the first quarter of 2022. Current ratio is pretty stable at about 1.6 times to 1.7 times. Same story for asset to equity at about 1.5 times in 2021 and 2022. Next slide, please. So in 2018, we were able to lease out the company. We generated about 7.6 billion from the IPO. Out of the 7.6 billion, we already used 6.9 billion during end of 2021 and about 144 million during the first quarter of this year. That gives us a balance of about 588.6 million. Most or substantial portion of our proceeds from the IPO were actually used for our pipeline projects. And we also use part of it for land asset acquisition and at the same time infrastructure development within Aseana City. In terms of the projects that were benefited from these proceeds are the following: Pixel Residences, Aseana 8912, Parcal, Mid Park, and part of it also for our next project, which is Aseana Plaza. Next slide, please. So just to give you a summary of what transpired during the first quarter of this year. So our consolidated revenue amounted to about 1.6 billion, and our core net income jumped almost 3 times to about 961 million from 365 million a year ago. Revenue from rentals keeps on increasing. That's up 13% from to 560 million in the first quarter of 2022. In terms of our residential segment, our revenue or top line also increased about 233 million from 194 million during the first quarter of 2021. We have successfully deployed 6.9 billion or 92% of the total net proceeds from the IPO. Just to give you an outlook of what will happen until the end of this year. So our newly completed Aseana 8912 project, which will have about 69,000 gross leasable area. will be continued to be leased out until the end of this year, as well as our project 58 Jupiter. We also expect the completion of our second of our commercial project, which is Parkal, during the second half of this year, which will further augment our recurring income streams. And as far as residential segment, this will be driven mainly by our second residential project, which is Bit Park Towers. That's all from my end. Thank you, Jeff.
Okay, so to discuss our COVID response, next slide, please. So this slide just practically summarizes our efforts to support our stakeholders throughout the pandemic. Next slide, please. 100% of our employees and estate personnel are fully vaccinated. We have launched our employee vaccination program called 2 Shots Forward at the height of the pandemic. And over 90% have already received the booster dose. So next slide, please. Our mixed-use assets and office buildings are Safety Seal certified. This ensures the safety of our tenants and visitors. Next slide, please. So just a bit of discussion on sustainability. Next slide, please. These are our 5 pillars of sustainability: quality of life, environmental stewardship, good governance and ethical business practices, people-centric labor practices, and economic development. Sustainability, tenets of sustainability have long been embedded in our business philosophy. Next slide, please. And I'm proud to report that these efforts did not go unnoticed. Last March 2022, DM Wenceslao performed in the top 1/3 in the real estate industry of S&P Global Corporate Sustainability Assessment. So we had a 73 percentile rank, 100 being the highest. This is among the highest among Philippine property listed names. So yeah, something to be proud of. That ends our presentation, and Jeff, we'd be happy to take on the questions. I see a lot from the comment boxes right now, so yeah.
Thank you very much, Jeff. Buds, thank you, Julius, and thank you, Attorney Harrison, for the comprehensive presentation and update on the performance of DM Wenceslao for the first quarter. So let's get that right. I was thinking about it. The good thing with our presentation and conversation today is that it prepares everyone for the upcoming second quarter earnings call or analyst briefing that should be right around the corner, maybe over the next 2 months. But yeah, congratulations, gentlemen. Hope you can keep up the good performance for the rest of the year. But yeah, Jeff, we have so much questions, but the first one from Elizabeth Terrado. Let me read it out first. Her question is, thank you very much. May I know what is the rationale for the downtrend or of the downtrend for Ali, Megaworld, RLC, etc., with a positive outlook for real estate? Thank you very much. I guess this question is more for the broker, but I guess the good thing with having you here is that, especially Julius, who's been with Colliers, if I'm not mistaken, prior to joining DMW, is that it gives everyone a good perspective of how the property market is doing. So let me piggyback na lang on the question of Elizabeth by asking, since I haven't been to Aseana City and to that area for quite a while, how is the situation there now, and how has it been picking up over the past, I would say, past year?
So I think Sir Julius would first take a stab, and probably Buds if you have a few more comments. But let's start with Sir Julius.
Okay, so just to give you an overview of the real estate market, apart from what I've highlighted earlier on, so I guess right now, like, companies are starting to become cautiously optimistic. Although we're still facing a lot of challenges, for this year, the Ukraine war started, and we're now facing some challenges related to inflation. But like, companies are now able to finally mobilize their people So and transactions are now occurring. So we're cautiously optimistic that we finally have like a grip on what's going on. The pandemic is under control. We're just control trying to deal with some other challenges which we're facing worldwide, right? So
Mm.
um, you
Yeah.
know I think moving forward in the next few months, we'll start seeing a lot more activity.
Mhm. Okay. Actually, it was very encouraging, the statistic that you shared earlier. There is a 32% uptick in terms of residential sales transaction for the second quarter versus 1Q. Is
Yeah,
that
yeah,
correct?
that was observed by Lichu, a
Mm,
property consultant. So hopefully, that trend continues as like
mhm,
people are finally going out. They're seeing what projects are out there. Projects are becoming, they're launching. So
mm.
yeah, hopefully we'll see more activity like that.
Yeah. Thank you very much for your question, Elizabeth. But hopefully that we were able to address your question. The second question that we have here, gentlemen, is from Miss MSBQ789. Do you do you expect your margins to remain consistent for the year in times of high inflation?
Okay, Attorney Herson, do you expect your margins to remain stable, to remain high?
Yeah, actually, based on our forecast, we will still have the same margins throughout the year. In terms of our cost, we have already pegged our cost even before the pandemic. So, I mean, in terms of construction costs, it will still be the same, notwithstanding the
Mhm.
fact that the prices of steel and the prices of cement is still going up.
Mm,
Just to double tap on that, Jep, no,
mm,
we are we're currently constructing mid-park towers and Park Calno. So well before this increase in construction material prices, we were already able to award the contracts and therefore lock in the prices. No, so the impact of this surge in construction material prices would not be as much no for us.
mm. Well, I will not leave that unnoticed, but you actually said double tap. That's very millennial. I will probably use that later on. But yeah, thank you very much for that. From Pat Bayot, has the high level of COVID cases hindered your business plans for 2022?
So this question goes out to Buds. Wenceslao.
Hi, Jeff. Hi, thanks, Jeff. So the short answer is, of course, I mean, COVID has affected everyone. But that being said, if you're looking at real estate companies, the major indicator is basically the can you hear me?
Yes.
Yeah. Yeah. So the main qualifying factor for real estate companies is the quality of real estate assets in the underlying company. And most, if not 90% of our properties is in a major mixed use master plan CBD. As you know, master plan CBDs have been proven resilient during COVID just because a lot of the essential services and products are within walking distance, which proved good amenities for office and residential residents. So that's what we experienced. Even now, as the city opens up, um, we're able to see huge demand right now from take up from our office leasing, and we're seeing a lot of transactions double or triple what we're seeing a few months ago.
Mm. Yeah. So before I go to the next question, let me can I have a follow up question on that one? So the chunky transaction that you just did recently, that's about 440,000 pesos per square meter. The size is about 20 hectares. Is that correct?
No, that's 1,800 square meters.
Oh, 1,200. That's something that has been in the works, like a year ago, or that was something that all of a sudden there was a willing buyer reached out to you. Hey, you have this size, this parcel of land. Can I buy for 440? Did it happen
So
like that?
as you know, we have wait list of Aseana City buyers. So we plan this well ahead of time, and we tell our wait list whenever we have a planned sale for the year, and that's what happens usually.
Okay. All right. Questions are now coming in. There's a flurry of questions from Richard Tan. Any plans in terms of? Oh, sorry. This is from Rafi Neil Cruz. Hi po. Hope you can see this. I just want to know what is the current occupancy rate for your buildings. Thank you for doing this event. More power.
So again, Buds, if you could answer.
So currently we're at about 50%. Just because we added 79% to our existing portfolio from 90,000 square meters to 160,000 square meters. That being said, we're seeing a lot more transaction this year, definitely in comparison to last year.
Okay. Thank you, Buds. Okay, for our next question. This is from, I guess we can, I'm going to take Pat Bayot's question. Has the high level of COVID cases, sorry, that has been answered. I wanted to show Richard Tan's question. Any plans in terms of improving your market liquidity to address the stock's discounted price?
Yeah, Jeff, I'll take that. Well, this is part of the plan. So this is why we're doing this with you guys. No, we're trying to reach out to the market, both from the institutional side and, of course, the retail side, which has ever been growing. No, so this is part of the plan. There's more in store, but this is as much as we can disclose for now.
Okay. Yeah, actually, that's a very important question. Now, I would like to call on a professional fund manager, Luis Francisco. His question is, do you have plans to spin off the leasing portfolio into a REIT?
So this question goes out to Buds. Do we have plans to spin out our leasing portfolio to a REIT?
So right now, as you know, we're a high recurring income company. So definitely we are a candidate to do a REIT in the future. That being said, the percentage of stabilized recurring income developments are still low just because the bulk of our pipeline is still coming online this year, next year. So from a underlying asset perspective, yes, it's in the plans. From a funding perspective, in terms of our debt profile, we still have about 80% of our debt portfolio to be untapped. We're still using the IPO proceeds. About 10% is still left.
Okay. By the way, gentlemen, if I just realized that we're already past our scheduled time, can I ask you guys to stay on for the next maybe 10 to 15 minutes just to address some more questions?
Yeah.
We'd be happy to. We'd be happy to, Jeff.
Thank you very much. Actually, for the next question, Jaime Zalamea is our analyst here in AB Capital Securities, and one of his many questions actually is any new updates on the occupancy rates of your mid-park towers in your Parkal building. Are you still on time to complete those projects?
So maybe this was mistyped. No, maybe because Mid-Park Towers is, of course, a residential building that's still being constructed. So maybe this is about 8912 occupancy rate and Parkal building. If we can have Buds to answer this, any updates?
So in terms of the leasing of 89%, so it's still going ramp up. But that being said, that 20% of Mid Park is basically the size of one office building. So in terms of the strategic location, we know that it's a prime asset in the Manila Bay area just because it's fronting a major road and it's across the Ayala Malls, Manila Bay. So it's the number one option. But yeah, we're seeing a lot more demand right now.
Okay. Actually, if you don't mind, gentlemen, I would like to call in Jaime Zalamea to the virtual floor so that he can ask his questions. He has a couple of questions.
Hey, man.
Hi guys. Nice to see you again, Jeff. Thank you for clarifying my question. Yes, I did mix it up, so apologies for that. I just wanted to say thanks again for the very, very thorough and very detailed presentation. I just had a particular question about your land sales. I think that was the majority. I think the majority of your revenues was because of that, around 50%. So do you expect to have any more land sales in the near future?
So first off, no, we have around 4,200 square meters of land remaining for sale. So just a bit of history, we start when we did our IPO, this was at 10,000 square meters. Back in 2019, we did a 2,200 square meter land sale. In 2021, the fourth quarter of 2021, 1,790, and then 2022, another 1,790 square meters. As to the timing, we can afford to wait, for higher prices, definitely, because we don't need it as a capital raising function. No? As you know, our balance sheet is quite comfortable. We are at the net cash position, so we can wait for better prices, definitely higher prices. No, hopefully from the last price that we commanded.
Okay. Thanks for the clarification, Jeff. That was my main question for today's presentation. So thank you so much.
All right. Are those all your questions? Okay, thank you, Jaime. Thank you very much. Okay, this is a question coming from a friend who vibered it to me and would prefer to remain anonymous. Okay, so the first question is, I have a couple here. So the first one is, most of the assets you discussed earlier are all in the Bay Area. How do you manage concentration risk?
Probably, Buds, I'll have you to answer this. Our concentration risk.
Can you hear me?
Yeah, I can hear you.
Yeah, in terms of concentration risk, the thing about real estate is it's not commodity. There's a different aspect of it. So how we view it is it's that concentration of highly prime quality land bank. So it's like saying Loyola in the 1970s. How do you view concentration risk in Makati City? So it's all pretty prime. That being said, we are investing in other areas. So we are looking at investing in more stable and prime areas. That's why we bought that property in Jupiter Street in 2018 and in the Gaspi Village in 2021.
Okay.
Jeff, I think concentration risk is just one downside to the many upsides of having land that is sort of clustered together, contiguous. So since our 56 hectares of land is clustered together here in Aseana City, we can execute a holistic master plan to develop it. So, we are in control of the developments that we want to put into Aseana, and we make sure that each development, of course, accrues value to each development and to the estate in general. So you can imagine the kind of ecosystem that we're building. The offices would feed in foot traffic to the malls, and the malls serve as an attraction to the prospective tenants of offices and even residential buyers.
Yeah.
Now, sort of take an alternative scenario, just a theoretical one. So say a company has also 56 hectares. For simplicity's sake, it's also valued at around north of 200 billion pesos. But it's scattered all across the greater Metro Manila area. So you have a couple of hectares in Makati, a couple of hectares in Bonifacio, a couple of hectares in Ortigas, Las Piñas, and so on. So now you don't have concentration risk. But what you'll have there is sort of a dependency risk, because unlike us, you can't sort of plan what kind of development will be beside you. So for instance, you opt to build a residential development, and the guys beside you have the same bright idea to build a residential development, then that's going to be a problem, because everyone there is a residential with no one, with no malls or offices to sort of put in the demand, So yeah, there's huge benefits to having contiguous land. It's just so that it's termed as a concentration risk. But yeah, as mentioned by Buds earlier, in some way, no, it's a good risk to have.
And also in investment. I mean, there are proponents who would suggest diversification, but there are also proponents of having a concentrated portfolio. So in this case, actually, I see your case there. Actually, I see your case there. Now, there's another question coming from this person, and it pertains to the Pogo industry. And I'm piggybacking on this person's question because I've noticed that most of the listed stocks, at the very least, most of their stock prices have come down since 2018. Of course, that's also when our PSEI peaked. But I think part and parcel of that decline is because of the um, Pogo's leaving this country, being more regulated. What is the situation, or are you starting to see more tenants coming from that industry, or you are deciding not to focus on that one?
Probably Sir Julius first would have his comments on this, and if Buds would like to add.
Yeah, well, the observation is correct. Now, the Pogos have driven the office market pre-pandemic, for several years, and it's actually propping it up. Depending on who you talk to, parang their footprint pre-pandemic ranged from about 1.2 to 1.5 million square meters. That has now decreased to about half of that, maybe around 600,000 to 700,000. So because of the challenges brought about by the pandemic, and also because of like some policy related issues. Yeah, if you talk to some of the property developers, they're now seeing some activity from the Pogo sector. They're now trying to slowly ramp up on their transactions on their requirements. So maybe we will see some improvements coming from that sector. So as I mentioned earlier, the projection for occupancy or vacancy rates for the office sector would rise around 17 to 18%. But with the Pogos coming back, that will drop to about 10% in the next couple of years. So the office sector does need that demand driver, and hopefully it does come back. And that will kind of soften the blow that we've seen because of the pandemic. And then maybe Buds can highlight some of the things that we've been seeing as a company.
Okay.
So overall, pre-pandemic,
It's still on mute.
our last building. Hello. 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 Yeah.
Yeah.
So our last building came online in 2017. So that was pre the massive surge of Pogos in the Manila Bay Area. That being said, we have some exposure, but we've never been able to get the massive 1,400, 1,500 square meter pesos per square meter lease rates. That's why even during the slight exodus, you didn't see a massive effect in terms of our recurring income contributions from office leases.
Okay. All right, gentlemen. I don't want to ask for another extension, so I will just have one last question. Again, this is from an institutional fund manager. The question is, how are the upcoming BSP rate hikes impacting or going to impact your business, particularly on the residential side?
Yeah, Jep, I'm gonna take that. So I think the forecasts right now are ranging from a cumulative of 100 basis points to 150 basis points this year. No, if the BSP delivers on the high end of that, 150 basis points, our benchmark rates will still be at 3.5%, and that's still lower than where we were pre-pandemic, which was 4%. No, I'd also like to note that generally banks do not need to move in lockstep with the BSP's rate hikes. As a matter of fact, just recently we looked at the bigger banks' mortgage rates, they're still at around 6%, no, where it was even before the rate hikes of BSP, no. But nevertheless, even if there's an adjustment of say 25 basis points in the mortgage rates, I don't think that it will be enough to dissuade property purchases. No, if you do the math, a 25 basis points increase in your home loan rate or your mortgage rate would only result to around 2% increase in your monthly mortgage payment, which we think is quite manageable. No? So, yeah.
Yeah.
Wow.
Jeff, well, in addition to that, let's take things into proper perspective. Currently, with respect to our rates, our short-term rate, it's about 2 point something percent per annum. As far as our long-term rates, that's about 5 years. That's more than 3.5%, or less than 4%. That's for 5-year fixed term. Now, if you take note in terms of the timing of our project right now, we don't have any projects which is due for turnover at this point in time. So, regardless of whether the BSP will increase the rates in the next few months, our buyers will not be affected because they're still paying their monthly amortizations, and the turnover will later take place probably late next year.
Okay. That's very good to hear. Very encouraging still. Okay, gentlemen, we've reached the end of our extension, the end of our overtime period. And I would like to thank you once again for spending your time this afternoon with us, telling us more, updating us on what DM Wenceslao has been doing over the past couple of years, and of course, what to expect from you gentlemen moving forward. But before we officially close the session, may we hear some last or closing remarks from Buds?
Hello.
Yeah, we can hear you, Buds.
Okay. Thanks, Jeff. I'd like to thank EB Capital Securities for taking time to hear the story of DM Wenceslao. Hello, can you hear me?
Yes, that's better.
Sorry. Thank EB Capital for taking time to hear DM Wenceslao's story, and I hope more investors get a chance to take a look at our numbers and what value there is left.
Yeah. So, gentlemen, and to all of our audience, to all of our investors, clients, and friends who've joined us in this call, it really goes to show how resilient we are all throughout the pandemic and all throughout this event. Because despite all the technical difficulties and interruptions we have encountered, we are here and we've reached the end of the presentation. But yeah, may I please may we please see again our guest as I thank them for being here with us today. Yeah. So, gentlemen, on behalf of AB Capital Securities, our marketing, our team, and our chairman, I would like to thank you on behalf of our team here for spending your time with us this afternoon, for sharing those insights, for giving us a preview of what to expect from you and your company moving forward. And we do hope to see you again here in your upcoming earnings call throughout the rest of the year.
Thanks, Jeff.
Thank
Thank
you,
you.
Jeff.
Jeff, thank you very much for putting this together.
Thank you, bro. Thank you for giving us a platform.
Of course, of course. Now, to our friends, to our clients, to our friends from the industry, thank you very much once again for joining us during this afternoon's edition of Earnings Call. Now, this earnings call is something that we have put together because we would like to bring listed companies, of course, executives who are the captains of the ships, so to speak, if you will. And we would like to know how they think aside from what we see in the stock prices, especially in the case of DMW, wherein, as you can see, or maybe if you sparingly see it on the ticker, it hasn't really moved that much. But what's happening underground, underneath the surface, is, I think, what is very important. And this is what we do with earnings calls, with events like these, so that we can always be attuned to what is happening on the ground as we go out ourselves. But more importantly, to talk to executives, to talk to principals, to talk to owners, so that when the right time comes, hopefully we will be more prepared for those opportunities. Now, that being said, let me just say that these events are also conducted for educational purposes and are not conducted to serve as recommendations to buy or sell the subject companies and their underlying securities. Now, we've spent a lot of time this afternoon, and we are very grateful that you were able to join us. Our next event is sometime during the third quarter of this month, or maybe during the fourth quarter of this month. Please await for the teasers, for the invites in our social media pages, and of course in your email as we send those invites ahead of time. Please be sure to make time for our next earnings call, because we would like to keep you informed and, of course, keep you glued to the opportunities ahead. Once again, my name is Jep Tang, and I am with AB Capital Securities. And on behalf of everyone, the men and women who made this event possible today, we would like to wish everyone a happy weekend.